Well, greetings to all my investment clients. My name is Walter Measers, your wealth manager, CPA tax advisor. Recording this on Sunday, June 14th, our weekly stock market recap. As always, need to read this disclosure. This video is not intended as investment advice or solicitation to buy or sell any securities. Anyone else watching this video other than my clients, please seek investment advice from your current advisor or give us a call to so we can give you a retirement risk analysis of your portfolio. So at your leisure, please stop the video and read the full disclosure. Again, this is not investment advice. It's for informational purposes only. So let's get into the weekly stock market recap. As I mentioned, I'm recording this on Sunday, June 14th. So this is as of Friday. Week in review, indices, key drivers, and forward outlook for the next week. So what did markets do for the week of June 13th? Dow Jones up 0.7, or we say 70 basis points. S&P up not quite 0.5%. NASDAQ for the week was down kind of flat, down 0.09%. And the 10-year bond was up 2 basis points. So not that whole lot, but as I'll talk about interest rates, interest rates are still kind of trending up, and that's not a good sign for the stock market, as I'll explain later. And crude oil is kind of trading in a range, 84 to 86. Gold also is trading in a range. Actually, year to date, it's down. Bitcoin is also down. Obviously, everybody this week was talking about SpaceX IPO, largest in history. SpaceX debuted on NASDAQ June 12th, raising $75 billion. It started at $135 a share, the biggest IPO ever. Shares opened at $150, surged to $176, and closed at $161. So up 19%. So this could push the NASDAQ technology potentially next week higher. U.S.-Iran peace deal optimism. Again, the latest news on a deal. Supposedly, something will be signed Sunday to open up the Strait of Hormuz to let oil, be shipped out. Oil dropped, which was positive for the market. Chip stock volatility, NASDAQ dropped 4.18% on June 6th. That was worst day since April of 2025. After Broadcom disappointed on AI chip guidance, the sector recovered through the week, but remains a wild card for tech bulls. Strong May jobs report. Payrolls came in at 172,000. Versus consensus of about 80,000. Just a caveat on payroll jobs reports. The unfortunate part is the mass media, financial media, does not talk then restatement of these job creations, which then are pretty much restated much lower than reported. So stay tuned. As I mentioned, over the last year, really with all the restatements, revisions, we actually had for the last year job losses. So the economy is potentially not as strong as the media would lead you to believe. So kind of big picture, stock market year to date. So as you can see, January was kind of flat through March, and then it took off. And so it's kind of trending up. 52-week low for the S&P 500 was 5,943. It's 52-week high, 7,621. So year-to-date gained 24%. Current 7,584. Which direction it's going to go? As I keep saying, markets just can't go up and up constantly. The probability, and I use probability, is getting higher and higher that some type of correction is probably going to occur. Is it this month, next month? I don't know. Just a reminder, my clients, we are still invested in QQQ, 30%, 15% in SPY, S&P 500, and the rest is sitting in U.S. Treasury short term. So we are participating, but we're somewhat optimistic, but very cautious right now about the market, because anything could send the market in a spiral, kind of a waterfall. So we'll just have to see what happens next week. So macroeconomic outlook, what's the concern? Inflation. Federal Reserve is really concerned. May CPI came in at 4.2%, higher than expected, highest since 2023. Consumer price index, that's inflation. So producer prices also elevated. So all this is making the Federal Reserve, at least the consensus is, most likely they're not going to, definitely not lower interest rates, potentially raise interest rates. Labor market is resilient, but as we've seen in the past, what's created and then revisions are not, unfortunately, very well advertised or promoted, because the reality is there isn't a whole lot of job creation as the market would lead you to believe, or financial news. Federal Reserve is probably right now on hold because they're concerned about inflation. Energy oil is easing because of potential deal with Iran. If the deal is signed, then energy oil prices will drop, and most likely the market will pop. So we'll just have to wait and see. Artificial AI, artificial intelligence, that's really what's driving the markets higher and higher. Tons of spending, we call it CapEx, but trillions of dollars are being spent on AI, which is really lifting the market, the broad market, especially technology. The concern is, with all the spending, will they deliver on income, revenue, and profits? And that's a big question mark, because tons of money is being spent, and markets are going up on the hopes that this will pay off tremendously in the next 1, 2, 3, 4 years. We'll have to see. Energy market, again, energy concerns, but again, if there's a deal signed, energy prices should come down short term. That may take a while at the gas pump and kind of in the general economy, but again, this week should be a very interesting week as it comes to hopefully some kind of resolution with the Iran war. So what's coming up? Week of June 16th, FOMC meeting, Kevin Warsh's first meeting. Rates expected to hold steady. So it'd be a surprise shock if the Fed did anything at this next meeting. U.S. Iran peace deal progress. So again, stay tuned. If something is signed, that'll be very positive for the stock market. Obviously, oil prices will go much lower. Michigan consumer sentiment final preliminary came at 48.9, above the 46 estimate. A final reading could signal whether consumers are feeling the Iran-related relief. The Michigan consumer sentiment is really it's a guide of what the consumer is feeling about the economy. Not so much what they're spending, what are the concern, and there's huge concern. They may lose a job, their income is not keeping up with inflation or cost of going to a grocery store or cost of gas. So hopefully there's some relief if oil prices do come down. S&P 500 earnings calendar. Second quarter earnings season approaches. Analysts' consensus calls for 13% earnings growth. So also watch for guidance on AI. So it should be an interesting week. Again, thank you for watching. We'll just have to stay tuned. What is this week going to bring us? But let me just refocus just real quick. If I could find it. The S&P, the broad market. And so year to date, remember we are in QQQ, so we caught part of the upside. We are in S&P 500. So as for year to date, technology is up about 16%. The market is up about 8%. Gold is actually down about 2.74%. But as I keep referring to this chart, this is what concerns me and keeps me kind of very, very nervous, because as you can see, as I've showed this over and over, this was peak 2000, peak 07, and look what happened. There was major corrections. Are we heading that direction? The probability gets higher and higher. The higher the market goes, the probability of a pullback gets higher. Let's look at bonds. Where did my bond? Oops. Here's the 30-year bond. Again, just going back from 1982. As you can see, there was a trend down. Interest rates were going down. Now the trend is up. So it's still not time to consider long duration bonds. There'll be a time frame. I don't know if it's in a month or two, when interest rates start to come down, which most likely the probability of interest rates coming down is getting higher and higher as economic growth is slowing. So that'll be a tremendous opportunity for our clients to make very good upside potential. Markets will be pulling back. We did this in after COVID. My clients were up about over 20%, where the markets were down 30%. That's a 50% swing. So that's where our value comes in. When markets are correcting, we are making money for our clients versus either sitting or losing money or making no money. That's really our added value. The other potential is gold. So there's two, long duration bonds and potentially gold at some point. We're going to stay the course in the stock market unless something changes, and we may, this coming week, if the market pops, we may take profits and be out of the market and just sit on the sidelines and see what's going to happen, which trend line is going to show us. So thank you for watching, and stay tuned for our next weekly stock market recap. We'll see you soon. Take care. Bye now.